In this video, we're going to talk a little bit about taxes. Now, you're not going to learn how to actually do your taxes. The idea of this chapter, this video, is to give you some basics to understand how taxes ultimately are created or calculated, but really to take a look at how they may affect our financial planning decisions. So there's some tax law changes that we need to know about, and again, this textbook is a little bit older, so some of these have been in place for a while. There was something called the Economic Growth and Tax Relief Reconciliation Act. Basically, this was a way of trying to stimulate the economy through some tax relief, right? Again, we phase these in over time. One of the challenges that certainly, at least this is my opinion, that I have, is that most of these things are implemented and they have some type of a sunset clause. That is, let's put them in there and we'll make people happy for right now, but nothing's permanent. We're going to change it somewhere down the line. The Job and Growth Tax Relief Act. Again, this was geared to help accelerate the tax relief from the 2001 or late. It lowered individual rates 2 to 3%, increased some of the child tax credits, increased some standard deductions for married taxpayers. But again, the idea here is all about stimulating the economy. Again, this next act, the Tax Relief, Unemployment Insurance Reauthorization and Job Creation Act, again, it was there to extend the provisions from previous tax law to the year 2012. In the American Taxpayers Relief Act, we actually permanently set in place some of the provisions from the 2010 Act. The Affordable Care Act. I mean, this obviously is a part of legislation that was very important. Very controversial. It's turned out that over time, but for one reason or another, has proven to be rather ineffective at trying to find a way to provide health care to a great majority of people at a reasonable price. And as I'm sure you're probably aware, the struggle continues with respect to this issue of providing health care. So what are the other taxes? Besides income tax, we have other taxes, right? So there's earned income. Earned income, that's your salary or your wages. What about taxes though, right? FICA tax. This is the tax that's paid to the Social Security system and Medicare. And if you're not familiar, someday you will get familiar. Medicare is a government health insurance program for people over 65. So it provides health care to those retirees. Now, it's run by the government, so there are issues with its sustainability, its efficiency, its effectiveness in actually providing health care. As far as who pays for this, it's all paid through the Social Security and Medicare taxes. Social Security taxes are about 6.2% of your salary, up to a maximum of $118,000. Again, Medicare taxes are 1.45% of your taxes. Self-employed people got to pay two parts. So your company pays the second half of this, right? So if you look at that, that's roughly 7.65. Add that to 7.65, that comes out to 15.3%. So businesses pay the other half, and of course, if you're self-employed, you pay both halves. So when we're talking about, and I hate to be too off-center here, but when you're talking about altering taxes to stimulate the economy, this is the piece that nobody talks about. right? We still have a great amount of money that's paid out in these taxes, and that's not the item that's ever considered. So again, you can talk about this a lot of different ways. We just need to understand that this is a part of taxes that you can't do anything about. So your filing status, you have a choice of how you want to be considered for taxes. If you're single, you're single, right? If you're married, though, there are some other ways that you can be classified. Married filing jointly is the way most married couples will probably file, but you could file separately. Head of household is a designation for a person who has dependents, maybe other than their own. And of course, you can also have something called a qualified widower with a dependent child. So the tax tables associated with these classifications is different. Gross income is all reportable income. This is from any source. Salaries, interest, dividends, capital gains, right? Including bonuses. Now, what isn't included here are things like contributions to your employee-sponsored retirement account. Those aren't taxed. Interest income obviously is earned on investments or loans to obviously other individuals or obviously just to investment securities themselves. Everybody understands what dividend income is. What you are paid if you receive payments from stocks or mutual funds. Capital gains taxes is earned when you sell an asset. If you buy a stock and then sell the stock for a profit or loss, it is going to be classified as a capital gain or loss. Now, it can either be short-term or long-term. Short-term capital gains are held for less than 12 months. So if you buy an asset and you've made money on it, you never want to sell it until after the 12 months has passed. That's 365 plus 1 day. The difference between the two is taxation. Short-term capital gains is your personal tax rate. As you'll see a little bit later, that could be relatively high for individuals. Long-term capital gains are capped out at 20%. So the capital gain, okay, we're talking about the capital gains tax, right? Long-term gains is, again, much lower than the tax on ordinary income. And again, it's between 0 and 20% depending on your income. So gross income is, or to determine your gross income, you add up all those reportable sources, and then you subtract out or you adjust it for some items. If you contribute to an IRA, if you make alimony payments, interest that's paid on student loans, and some other instances, other special categories of interest. So in the end, adjusted gross income is the number we want to know, because that's where we're going to start calculation of taxes. So adjusted gross income, AGI, is the ultimate number to find and to try to work with when you think about how much taxes are you ultimately going to have to pay. See you in the next video.